Hello, ladies and gentlemen. My name is Sanford Khan. I'm an economic consultant and business author. The title of this short presentation is What is the First Law and the Only Law You Really Need to Know Regarding Financial Bubbles? What I mean by financial bubbles, it's a bubble that's fueled by excessive amount of debt. And the question, logically, the answer is, are we in a financial bubble? The answer is definitely yes. I know you could hear in the media, probably in the Wall Street Journal, I've read a few times, experts, so-called experts, saying we are not. They don't know what they're talking about. It's pure crap. We are. We're in a huge bubble financed by a tidal wave of cheap money by the U.S. Federal Reserve and other Federal Reserve banks in other countries, but I'm just talking about the United States. Corporations are borrowing excessive amounts of money by issuing debt. That's rational because they could do it at very low interest rates and stockpile the cash. An economy, as this is being done, is decreasing, going negative. At best, we'll probably in the third or fourth quarter maybe revert to a slow positive, and into next year, don't expect miracles. Slow positive growth. That's probably the best you're going to expect. Besides the $4 trillion deficit of the U.S. federal government, they're issuing a huge amount of bonds at low interest rates, but it's huge bonds. You will pay for this in the years to come with higher taxes. And that doesn't count individuals who also have a huge amount of debt. This debt bubble is growing. It is not decreasing. It is growing. The whole economy, U.S. economy, is addicted to debt. So what is the first law of financial bubbles? And the only law you really need to know. Know this law. The first law of financial bubbles is all bubbles burst. All financial bubbles burst. There are no exceptions. Do you understand that? No exceptions. I don't know when it will burst. I can't tell you that. That's beyond my capabilities. I don't know exactly what could cause it to burst, but I have a good idea. We have an election coming up in November. Depending on what party wins, or it may not even depend on that, taxes are going to go up. What I mean by taxes are going up, that would be corporate, personal, and capital gains will go up. So you got to pay for all this easy money, all the money the U.S. federal government is spending, the $4 trillion deficit in this fiscal year, which ends at the end of September. You got to pay for it. You can't keep going this way. How do you pay for it? Through higher taxes. The worst time to raise taxes, is when the economy is going negative or growing very, very slowly. You will burst the bubble. You will suck liquidity out of the economy. What do you think is going to happen? That's deflationary when you suck liquidity out of the economy. The bubble, financial bubble, will burst. And what do you think is going to happen to the stock market? It's going to go down, way, way down. There's also another tax that some of the candidates, especially one of the leading candidates for president in this election cycle, has hinted at, and his party has hinted at, and that's a wealth tax. That's an annual tax of about 3% on wealth beyond a certain level. Only one problem about it. That level keeps coming down, and that's 3% a year. That'll kill investment in the United States. That'll kill investment, and that'll kill jobs, and that'll kill opportunity. It's probably the worst tax any politician could put in is a wealth tax. So you have the possibility of increasing personal, corporate, capital gains, and the possibility of a wealth tax coming in. What do you think is going to happen to a financial bubble? It will burst. Not maybe, it will burst. This is something that you need to be aware of. I like to end like I end all my presentations, except this time it is really germane. That means relevant. Remember this, liquidity is king, not Elvis. Appreciate if you could look at pass this video on to other people, and subscribe to my YouTube channel. I would appreciate it very much. Until next time, good luck, and may you prosper. Bye now.